All right, hi friends, Frankie here, and today we are discussing DeFi on Bitcoin. Our host, Patrick Stanley, he's the CEO of a crypto community development platform called Freehold, and Freehold incentivizes crypto holders to actively participate in education and other building activities. And you're gonna wanna stay tuned because he has quite a few big announcements coming soon. Our other host, Muneeb Ali, is the co-founder of Stacks and the CEO at Hiro. Muneeb has, as many of you know already, he's building the future of the internet through Stacks, basically allowing entrepreneurs and developers the ability to create apps and smart contracts on Bitcoin. Yes. And last thing, Stacks has officially launched an accelerator to help founders and builders build apps and smart contracts on Bitcoin. So if that sounds exciting to you, head on over to stacks.ac to learn more. And without further ado, let's get into our show. Today, we are discussing decentralized finance, specifically on Bitcoin. Now, let's remember that Bitcoin is a financial network that conducts $1 trillion of economic activity. The entire crypto space is about $2 trillion for perspective. And here's the thing, guys, if information truly seeks to be free, if communication peer-to-peer is to be private, then money is also a form of communication and therefore it should be private too. Decentralized finance gives us that privacy to communicate with one another using money. But why not Bitcoin, right? The argument that Bitcoin can only handle 7 transactions at a time is so outdated. I mean, even according to DeFiPrime.com, they have a total of 220 DeFi projects listed. 205 of those projects are in the Ethereum DeFi ecosystem, 19 are in the EOS DeFi ecosystem, and 26 are in the Bitcoin DeFi ecosystem. So it is happening, y'all. And today you're gonna hear from a guest who started on the Ethereum blockchain and made the decision to relaunch on Bitcoin. I'm so excited. And I just feel like this is gonna be a really great conversation. Muneeb, Patrick, the mic is all yours.
Hey gang, cool. So why don't we first start with some intros? Maybe we'll begin with Philip and then go on to Matt. Both have really cool projects. Wanted to just fill in the audience with what you all are doing for starters.
Yeah, sure. First of all, thanks for having me. Glad to be here and talk about decentralized finance tonight. So I'm Philip, founder of Arkadiko, which is a stablecoin and a lending protocol. Our stablecoin is crypto collateralized, and happy to talk more about it, but that's the gist of it. And yeah, we provide all liquidity to Stacks DeFi protocols, or that's our vision at least.
Awesome. I can give a quick intro. So, hey, I'm Matt. I'm one of the co-founders of Atomic Finance. So, yes, it is true as Bitcoin Frankie alluded to. We did go from shitcoiner to Bitcoiner. We originally started building cross-chain on Ethereum and Bitcoin, and you know, we were just really dismayed at kind of like the direction that Ethereum DeFi was going, and of course, we were building a product that was cross-chain that included Bitcoin. And you know, we made the decision, last year to decide to go full in on Bitcoin and build basically, sound infrastructure for sound money. If you're going to build sound infrastructure for sound money, it needs to be built on Bitcoin itself. We've been doing a lot of development specifically with DLCs, which is a primitive on top of the Bitcoin blockchain itself that allows for essentially the creation of smart contracts and allows for you to create all types of financial contracts from options to futures. And we're specifically working on building an easy way for people to make yield on their Bitcoin in a completely transparent and non-custodial manner. But excited to be here.
Awesome, great to have you here. I feel like this entire idea about Bitcoin is like a rock and you can't build on it. I find it very surprising, but at the same time, it is the dominant narrative out there, right? Like there are countless meetings that I take where you're talking to somebody and they would go like, yeah, but you can't really have smart contracts on Bitcoin, or you can't really. Bitcoin is very limited. Bitcoin, you can't really do that on Bitcoin, and that's why. And then they will either point to Ethereum or point to some of the next generation blockchains that are coming up. And I'm actually like very surprised that how much that narrative has taken hold, where when the reality is kind of like the exact opposite, right? Like there's almost like, most people are not technical, right? Like you shouldn't care if something is implemented at the base layer, or if there are two layers, and the base layer is simple, and then there's something on top that enables the other functionality. Most people shouldn't care, but I do think that there is almost like a industry narrative that has formed over time, and I wouldn't be surprised if there are people who have actually done significant amount of marketing to try and establish that narrative that Bitcoin is, because Bitcoin is kind of like a rock.
I think that actually brings up a really good point, Muneeb, that about the idea of people saying like, oh, if you can't do it at the Bitcoin base layer, if the Bitcoin script language isn't expressive enough for us to be able to build smart contracts. Well, at the end of the day, there's a reason for that. I mean, we see how much the Ethereum blockchain has grown in size. What is it, 8 or 10 terabytes now? Like, not everyone can run their own Ethereum archive node. Whereas, there's tons of people running their own Bitcoin node, more every day. And I think it's interesting how like Bitcoin has evolved to have, rather than having, an expressive kind of base language, things have evolved to allow for contracts on Bitcoin using, scripts that aren't, that are more off chain, whether it's Lightning or DLCs or side chains. So it's been interesting.
Yeah, and I think that's a very interesting observation, because I've actually noticed that a lot in crypto, where let's take the Bitcoin scripting language, right? And people would almost take that as a limitation of Bitcoin, whereas there were opcodes that were literally implemented in the Bitcoin code base, but they were disabled. Like imagine the code is there, but you are actively disabling that code, the piece of code, because the original developers, they wanted to keep Bitcoin base layer very, very simple, to reduce the attack surface for the sovereign money. And that's by design. That is there by design. And if you look at kind of like Ethereum, and if you think about a spectrum, on one side of the spectrum you have the limited scripting language, which has a very small attack surface. Ethereum kind of like took a spot on the extreme end of the other side of the spectrum, right? Like full Turing complete, anything's possible, and obviously comes with a very large attack surface area. And we've seen that over the last years, like how that evolves. But the key thing is that there are layer 2s on Ethereum as well. There are other, like in any system, in any blockchain system, be it Avalanche that has subnets, or look at Polkadot that has parachains and so on, there are other layers that help bring features to that ecosystem. And why not on Bitcoin, right? Like it's actually like a dead obvious thing that you could just do that on top of Bitcoin. And like RSK is doing it with merge mine chain. Stacks is doing it through our own proof of transfer type mechanism that connects to Bitcoin. Lightning has some interesting things going on. There are other types of ways as well. But in terms of market awareness for how these things are possible on Bitcoin, I think the market awareness is very, very low. And there is a very strong narrative that Bitcoin is kind of like a pet rock. And very similar thing happening on the energy argument as well. There's so much misinformation out there about the energy kind of like concerns around proof of work. And similarly, people are not asking the question that, what's the reason? Like, why is Bitcoin going for proof of work? And what's the trade-off that some of these other systems are making when they say, hey, proof of stake is like completely green? Well, you are making some trade-off. Like, so tell us about the trade-off. What is the trade-off that you're making if you're more energy efficient? And then you'll find out that you can't independently verify the history of the blockchain. because there's no proof of work, and you can't, as an independent node, you can't just start from the beginning and go like, here is the right version of the blockchain. So someone can give you 1 million different copies, and you have no way of finding out like, how do I start? So it's like bootstrapping trust problem. Again, these additional layers on Bitcoin, like Lightning or the Stacks chain that helps scale these transactions, they don't consume any additional energy. Like if a Lightning channel is doing thousands of transactions and it's settling on Bitcoin, it is quote unquote green, right? Same with Stacks. Like you could do thousands of transactions on Stacks and they will just automatically settle on Bitcoin. But we're not consuming any additional proof of work, and that's how transactions scale. So the energy cost is there to solve the very real problems of bootstrapping trust, of independent verification that this is the sovereign money layer is truly decentralized, it's truly sovereign, and then you can have scalability and more quote unquote energy efficient transactions that are just settling on Bitcoin. But the narrative is so strong to say Bitcoin is not energy efficient. Let's look here. We magically have these more quote unquote energy efficient things here, and people are not asking that. Okay, what are you giving up then if you're designing things that?
Yeah, definitely agree with that. I do want to second your point, Muneeb, about scalability. I do think we are in this transitory moment where this is going to change. You see, for instance, yesterday we had a very violent and volatile market. What happens in such markets is that a lot of people need to do transactions to post extra collateral to cover their positions, and in Ethereum or in DeFi at least, this happens all on chain. And so I saw people paying like up to $1,000 in gas fees just on Ethereum. But I feel like if Ethereum cannot scale within the next 12 months or so, this narrative is going to change heavily in favor of Bitcoin, the composability and layered scalability. I think even if Ethereum adds a layer 2 solution, which they're already doing, by the way, through Polygon, and I think Optimism is launching soon as well. But anyway, so I think this is in favor of Bitcoin. And speaking for Stacks or something else like Rootstock, where it's going to be a lot cheaper, to do on-chain transactions and roll them up and settle them on Bitcoin. And if people generally know that the Bitcoin blockchain layer is more secure and it's just more decentralized, especially if you look at Ethereum, if they move to proof of stake, it's going to get more centralized over time. I do feel that narrative is changing and that is in favor of Bitcoin and Stacks and other DeFi protocols built on top of it. So I do agree with you that is today. But I also think the narrative is changing heavily in our favor, that is.
Yeah, so that's very interesting, right? Like, so in terms of scalability, you're basically talking about two paths. Right? One path is that things are going to scale with additional layers, like people call them L2s or the other types of tools, side chains, or what Stacks has done. Or the second option is that somehow you can just scale the base layer. Right? And the scaling the base layer is Ethereum 2 approach, where they're saying, hey, we will build this magical new thing, and that will just kind of scale the base layer. That entire line of reasoning is kind of like very complex and very hard, and I'm very skeptical of it. And you don't have to kind of like just take my word for it. You can just look at the history of ETH2, right? I think it's started in 2016. It's been 4 or 5 years. Although there's a lot of kind of like marketing perception that ETH2 is around the corner, or something is launching, like it's nowhere even close to that, right? Like even if you follow their own timelines, it's a couple of years out. It will not have any smart contracts. It's more like a data storage layer at this point, than a full-fledged blockchain. And this upgrade from proof of work to proof of stake is potentially problematic. Yeah. So I personally, as a computer scientist, am not sold for this entire idea of like you can scale through these methods, like a ETH2 type of a method. And the layer 2's approach is much more practical, much more pragmatic, can work. And again, you don't have to take my word for it. Between ETH2 type solutions versus L2s are already working today, even on Ethereum. L2s are working. So if that's the mental model, that there are two paths, the base layer scalability is much harder, L2 scalability is much more practical. Then there's a very interesting question that why wouldn't you scale DeFi protocols with L2s on top of Bitcoin? And why would you do that with L2s on top of Ethereum or some other system? Because L2 is an L2. L2 doesn't care on which blockchain on top of it is running. Right? So what type of properties are interesting for the base layer? So the base layer properties are actually, the base layer needs to be durable, the base layer needs to be immutable, and the base layer needs to have a very small attack vector. These are the properties that Bitcoin has, because L2, when it's settling on the base layer, the only thing you care about is that is this thing going to be around years from now? Is it durable? Is it immutable? And I think those are the properties where Bitcoin actually shines. You don't want the base layer to be overly complex or be something that is constantly evolving and changing, because then it puts the security of the L2s into question as well. So that's the reason why Stack settles on Bitcoin, because we feel like we can trust that layer, that if something has settled on Bitcoin, it is not going to change. Bitcoin is not going to suddenly become a different system 2 years from now. Right? So those are the type of properties that make Bitcoin the ideal blockchain for L2s. And then the question is, if interesting things are going to happen in L2s anyway, then why wouldn't you do that in Bitcoin?
Well, I think to add on to that, Muneeb, like a really interesting thing about like when you compare, like one thing we found that was very interesting when we moved from Ethereum to Bitcoin was kind of the sense of community that exists in Bitcoin as well. Like if you look at all the different L2s that are being created on Ethereum, there's 4 or 5 L2s that are being worked on. They each have their own token. They're each incentivized to kind of work on their own thing. Whereas if you look in the Bitcoin community, there's a bunch of different companies, a bunch of different implementations that are all working together on building Lightning. And so it's a very interesting kind of difference between the two ecosystems to see everyone kind of working together in the Bitcoin ecosystem to kind of create a L2 that everyone can agree on, versus what you see in Ethereum for sure.
So we have been speaking a lot about Bitcoin and Ethereum, mostly as a network. I do want to add an additional thing about Bitcoin as an asset. So the closer you are to Bitcoin, if you're building on top of Bitcoin or through something like Stacks or whatever, you can access Bitcoin really closely. And you may or may not know it, but Bitcoin is probably one of the best collateral types in the world. It's very liquid. The markets never close. It settles in like 6 blocks, which is an hour approximately. It's super secure. I can transfer it really quickly. And so my case for DeFi on Bitcoin is always, if we have access to the best collateral in the world, why the hell are we sending it to a less secure chain, Ethereum or whatever? Why do we wrap it? Why do we send it away? Today, 1% of all Bitcoin lives on Ethereum. Why do we keep doing that? We give up our best assets to, quite frankly, use them on crappier blockchains. I love Ethereum. I love the innovation on it. But we need to stop doing that, I think, as a whole. If we have this great collateral and access to it, why not leverage it? So that's another point.
I think that's a great point, because I would actually say that the 1% of Bitcoin that exists in a synthetic form or wrapped form elsewhere is actually indication of strong product market fit, that people want to use Bitcoin so badly that they're jumping through hoops to go and use that within smart contracts. Like these things are not easy. Like if you think about wrapped Bitcoin, you are going through a custodial you are actually taking a tax hit, like an unnecessary tax hit to go from Bitcoin to wrapped Bitcoin, and then another tax hit when you come back from wrapped Bitcoin to Bitcoin. And then again, it's actually, forget about security and other types of risk. It's a very clunky experience to go and go so far away and then try to use your player. So imagine a Bitcoin lending application where the way to use that lending application is simply send a Bitcoin transaction. That's it. No tax hits, no kind of like additional synthetic assets involved, no jumping through hoops in using another blockchain. You already own the Bitcoin, just send a Bitcoin transaction and you're done, right? Like, because the Bitcoin transaction would trigger the smart contract that has the collateral and basically the loan triggers. So I do think that this model, it's a little upside down right now, where people are trying to issue Bitcoin on other blockchains. And the more logical thing is to bring smart contracts to where the capital already is, where the security already is.
Yep, definitely agree. This is actually one of the use cases we're going to enable with Arkadiko as well. You could post collateral in the form of XUSD, our stablecoin, and then just initiate a lending borrowing transaction straight on the Bitcoin blockchain without it ever having to, be wrapped or being a synthetic form. So that's definitely something I'm excited about. Yeah, and to be quite honest, Muneeb, you gave us that idea, so never thanked you for that, but it was genius in retrospect.
Oh, that's awesome to hear. I feel like I need to do more of that. Like, there's so much, potential here, and sometimes the bottleneck is telling people about it, right? Like telling people about it, which, by the way, I think Vitalik has done an amazing job at that. Like, if you look at the success of Ethereum, I think a large part of the credit goes to Vitalik, because he would put a lot of these ideas, sometimes they would even be half-baked, and he would just put it out there. And then, interestingly, I feel like there were a lot of folks who would love to see these products live, and they would just jump in and they would start building it. Whereas I think on our side, we're kind of like a bunch of computer scientists. Our first reaction is to not release something until we have fixed all the holes, right? So we're by nature, if you look at team members on Stack, like Jude or Aaron, they're all computer scientists who are trained to basically find problems in a potential solution, and they feel very uncomfortable, me included, to publicly release something that we don't think that we've done a thorough enough job at. And in some ways, like the opposite is the way to go in crypto. Like just that tweet storm that I'm talking about, it was a half-baked type of an idea. Just put it out there, and before you know it, Arkadiko is kind of like working on it. And I think we need to do more of that. We need to kind of like focus. At least this thing I'm taking a lot more seriously now, especially with Stacks 2.0 live. That instead of like going heads down more on the technology, like we need to be more vocal about, hey, here are the different things that are possible. Maybe some of the ideas are half-baked, but that's fine. There's so many smart people in the Bitcoin ecosystem who can take that and run with it, and maybe improve it in ways that we never even thought about.
Yeah, I mean, we have bored Elon Musk as a listener. He could probably come up with like 100 ideas per day. But
I just wanted to touch on something real quick, Muneeb, which is like, I think you brought up a really good point about the fact that people today, a lot of people are, it's clear that people want, DeFi on Bitcoin. They want to be able to use these tools. And the thing is, what are people doing today? They're wrapping their Bitcoin, putting it on Ethereum. They're sending it to custodians and, centralized institutions. Like we're literally in a situation where, all the financial tools around Bitcoin don't retain the same properties of Bitcoin itself. Bitcoin is censorship resistant. Bitcoin is seizure resistant. It's the best asset that exists in the world. And, we're just treating it like fiat at the end of the day. And so I think it's really fascinating to see more and more tools being built that, retain more properties of Bitcoin, for the type of contracts you can create for Bitcoin, the type of financial contracts you create with your Bitcoin, should retain as many properties of Bitcoin as possible.
That I feel like is an amazing point, and we should highlight it, because think of this way, that like imagine if like the analogy would be like, imagine your house or something, right? And you're leaving for a vacation, and you want to make sure that everything is like secured and you've locked up all the doors and whatnot. Your house is only as safe as the weakest link, right? If you left one door open, like it doesn't matter that the other doors were locked up or not, somebody could easily hack the house, right? Same with decentralization and security of blockchain. You're only as secure as the weakest link there. And if you have Bitcoin and you own Bitcoin on your own multi-sig hardware wallet, amazing, right? Like it's very hard for somebody to take away your Bitcoin. But now you want to use your Bitcoin in a smart contract. And to do that, you have to go through a custodian. Suddenly the risk profile like changes completely, right? Like it's like that open door that has been introduced in your security setup. And then Bitcoin has this amazing, limited scripting language. It has a very kind of like small attack surface area. And now suddenly your synthetic Bitcoin ends up on a smart contract language that is Turing complete. And it's like, you don't even know what this contract is going to do because there's no formal verification and so on, right? So suddenly your risk profile has changed drastically. And then to make matters worse, you are on a different consensus system, and that consensus system is evolving, right? Like they're trying to change to evolve into proof of stake or something else like that. These are the type of risks that I think the more careful, security conscious Bitcoin community is not going to take. And I think that's why, even though we've actually seen product market fit in smart contracts, and they're like billions of dollars now that are sitting in smart contracts, but it's nowhere close to the $1 trillion Bitcoin capital. So I think the bigger market, much bigger market here is when you can bring these solutions in a Bitcoin compatible way to Bitcoin, where people are not giving up on decentralization, people are kind of like not changing their risk profile, they're not taking unnecessary security risk, and they feel comfortable that it's very much in line with the values of Bitcoin.
Yeah, we like to call that Bitcoin culture fit. Meaning, like the idea of like you're building something that's built the Bitcoin way, built in a way that doesn't require doesn't require you to like wrap your Bitcoin, doesn't require you to send it to a custodian. Retains as many properties of Bitcoin as possible, and I think there's a lot of things that are building in a Bitcoin culture culture fit. Lightning DLCs, we're seeing a lot more development on on the base layer with new improvement proposals like Taproot coming to action now, which is going to open up a whole new world of possibilities. So yeah, I mean it's going to be exciting. But I think building things that are a Bitcoin culture fit is always important.
I want to touch upon that a bit. I do have an additional question, and maybe specifically for Matt, since you have been on both sides, right, on the Ethereum side, on the Bitcoin side. What I always feel with Bitcoin is, look, it's my preferred choice, but what I do think the Ethereums, let's call them, have done really well is just everything UX, right? The UX is like really great. For instance, the other day I was setting up a Lightning channel with a friend. It took us literally like 3-4 hours to figure everything out. To do something similar in Ethereum, well, you can do something similar, but you get what I'm saying, right? It seems like they're focused a lot more on UX, while us computer scientists are just excited about our lab science projects, if you know what I'm saying. How do you, how do you see that specifically working out with DLCs and things like that? Do you have an opinion on that, or what do you see?
No, I think that's a great question, actually, because I think like in general, what we've seen so far that's existed in the entirety of the Bitcoin ecosystem has been a very poor user experience. And that presents a challenge to be able to build things that have a great user experience. I think Lightning right now is just at a weird adoption phase where getting inbound liquidity is like a really hard problem. We don't run into that problem so much with DLCs, where we're actually working right now on building a really easy to use application or mobile friendly application that will allow people to just send Bitcoin to their app, the Atomic Finance app, and then click a few buttons and enter into a DLC. And that's just something that we haven't seen before. And I think it's because a lot of people in the Bitcoin community aren't as focused on user experience. They're more focused on building the underlying protocols. And I think that's actually a really unfortunate thing. We need to see more developers building things in the Bitcoin ecosystem. I think a lot of people are incentivized in Ethereum to go and build a DeFi project, to launch a token, a governance token. They can make a lot, they can make a lot of money. They make a great UX for it. They have lots of cash and reserves. Whereas, the people working on Lightning, there's a lot of less people working on Lightning, a lot less people working on DLCs, which makes it harder for the entire ecosystem to have a great user experience. But we're definitely hoping to change that with our app release. So yeah.
Awesome.
Yeah, I think this is actually sometimes a fairly fundamental thing in software systems in general. Like for example, if you look at the profile of a Linux kernel developer, like they are deep in the kernel code and they're not the right people to build the Linux applications, right? And similarly, I think Bitcoin tends to attract like very sophisticated, deep thinking engineers who understand security trade-offs, and they're kind of like very deep in the weeds of things. And historically, we have not attracted a lot of the developers who are kind of like building the outer, right? In the sense of like building the bridges or thinking about UX, thinking about UI. And in many ways, the people like over here, I'm calling them the kernel developers, they're a very bad fit for building those types of easy interfaces and so on, right? So I think it's almost like a skill gap that we are seeing here. But the interesting thing here is that because Bitcoin did attract a lot of the very sophisticated engineers, you have a very, very solid foundation that is sitting there, that where things have been thought through. Like imagine like if there's an actual kind of like wartime scenario where these blockchains are under attack, which blockchain are you going to feel comfortable storing all of your assets and life saving? I'll just put that in Bitcoin, and I'll feel like that's fine. A lot of these other systems have never actually seen a wartime scenario where someone is actively trying to compromise the integrity of the system and the kind of problems that can emerge. But in Bitcoin, like it has been stress tested, it has that type of a skill set, and in some ways, like Stacks is similar, right? Like the core developers who have kind of like built the layer, like I think they have a very similar profile to Bitcoin core developers. And this is something that we are now heavily investing in the Stacks ecosystem, because we also feel like we need to build those bridges. We need to make it super simple and easy for people to write the Clarity contracts or to use JavaScript like libraries to just get their apps up and running, because the core is solid, but we need to invest a lot more in these interfaces and so on.
I think you brought up a really, really good point, Muneeb, which is the idea, you talked about it as the kernel developers versus the the JavaScript developers, and I think that's actually something that's if you look at a Solidity smart contract in Ethereum, any JavaScript developer could just come along and write a smart contract, and when you initially look at it. If you're a developer and you want to build applications, you go and look at the ecosystem and you say, well, I don't really know how to build things on Bitcoin. How can you even do that? I didn't even think it was possible to build applications on Bitcoin. And so you look around and you say, oh, here's Ethereum. Oh, here's Polkadot. Oh, I can build this. I can create a smart contract really easily. And it's very interesting how it attracts, kind of all the people that, just want to go and build an app. And I think that's actually a challenge for us in the Bitcoin ecosystem, is to build tools that allow for, people to be able to build applications on top of Bitcoin more easily. Like, how do I create a DLC? Why can't I just, why isn't just an easy library that allows me to create a DLC on Bitcoin? Why isn't there, why can't I just create an application using Lightning? And I think there are the tools for that. I think Lightning has kind of different problems, but I think it's definitely up to us to make sure that we build the tools that make it really easy for people to build on top of Bitcoin. Yeah, and I think I want to make a clarification that this line of reasoning could easily be taken as saying that, hey, the Ethereum developers are not very sophisticated. Like, that's not what I'm saying. I think the Ethereum developer community is actually the biggest one in crypto right now. There's a report by Electric Capital that kind of like looks at monthly active developers, and Ethereum has the most amount of developers in crypto right now. You can't deny that. And some of those developers are sophisticated developers. I think I'm talking about a high-level profile of a developer. Like, there, for example, in the web space, there are a lot of JavaScript developers who understand how to write really good applications, and they don't necessarily know how the underlying database is working or how the underlying storage system is working. And all I'm pointing out is, in the Bitcoin side of the world, there are a lot of people who understand the nitty-gritty details of the underlying consensus stuff, or kind of like, they're the heart of the system, and less folks who kind of like know how some of the outer layer works. And if anything, we want to change that.
Hey guys, yeah, Muneeb. I wrote about this. I call it, or I don't call it, but it's called the Python paradox, which is a bit ironic because Python is super popular right now. But it just says that, more esoteric and more leading edge programming languages, because there's a higher hurdle for entry, the proportion of experienced developers in those ecosystems is far higher than in the popular ecosystems, because the inexperienced developers gravitate towards popular ecosystems.
Yep, that's absolutely right. But by the way, for people who have not read that post, you should go to Trevor's profile, follow him, and read his post about the overview of the Stacks ecosystem. Like, it was a very detailed post with a somewhat of an outsider's view. Like, Trevor has been a backer of the ecosystem since the early days, but I think he recently launched the accelerator, so he was coming with a fresh perspective. And I think in many ways, he described what's going on in the ecosystem like better than we can, because sometimes you can see things more clearly with a fresh eye. But he talks about this Python paradox in there, and I think it's a very real thing. Like, for example, if I'm talking to Jude, is an example of like an engineer that I highly respect, like, who has immense knowledge. And if I'm talking to Jude, I'll be like, hey Jude, do you think that there's a problem that there will be a learning curve or clarity language? And Jude's response would be, well, if you're not willing to go through the learning curve, then maybe you shouldn't really be writing smart contracts, right? Because smart contracts are really these things that will potentially hold like hundreds of millions of dollars. Like, if you're, as a developer, you're not even willing to learn a secure language in which you should be writing this code, then maybe you should be disqualified from writing these types of systems. Obviously, as a joke, but I think there's some truth to that.
And I think even from my personal perspective, when I first started getting into web development, I started in Ruby on Rails because it was the most popular framework when I was getting started, and there were so many tutorials and libraries available. But then as soon as I got really good, I immediately was looking for a new challenge and moved over to Elixir. And for those who don't know Elixir, it's a much more kind of newer language. It's a smaller community. But when you participate in that community and you're an experienced developer, you find that everyone around you is even better than you. And you get to get, hands-on time with the core developers in a smaller community. And I found myself feeling like I would never go back to Ruby at that point. And that's kind of the arc of a developer going from a beginner to an advanced. And if you're starting in something like Ethereum, if you're a beginner, that's where you're probably going to start, because, like you guys have been saying, that it's the most popular, it's easier to find resources. But as soon as you reach a point where you feel competent, you're going to be looking for a new challenge, and you're looking for something that offers advantages beyond the functionality of that ecosystem. Maybe something about clarity with the decidability and the fact that it's posting the source code you can read on the blockchain, so you can isolate interpreter errors. We maybe find that as something really compelling, and you're going to move immediately into something that you feel is going to be the next framework to gain adoption. And you're going to see that you're going to get more hands-on attention from the other developers who are, like you, able to overcome that hurdle of getting past the, learning from only reading the docs or learning from only debugging. And, that's how new programming languages grow too, because then startups come in and they want to hire the best developers. Well, it's a lot easier to hire good developers if there's a higher proportion of them in a certain ecosystem. That's why it was called the Python paradox. Paul Graham originally said, back in 2004, before Python was popular as it is today, he said you'd have an easier time hiring good developers or great developers in Python than in Java. And Java was, so popular. There's tons of Java developers, but the actual quality ones, or the higher proportion of quality ones, are in like Python in 2004.
Yeah, I saw that as well, by the way. I started writing Clarity just like 3-4 months ago. It's initially a bit of a steep learning curve, but once you get the hang of it, it's amazing. It's super quick for me now to write smart contracts. I'm like very comfortable in it. I'm loving it. And I do think we can onboard a ton of developers that way in the next 12 months. Maybe some need a bit more handholding, maybe some a bit less, but I'm completely sold on Clarity as a smart contracting language. So definitely buy into what you guys just said. Having said that, Muneeb, I did want to talk a bit about what you said, about the ecosystem, about Ethereum, that there are super smart developers in there. And there are. In fact, the Arkadiko founding team were 3 people, and 2 of them were working on Ethereum stuff. And I told them, look, guys, do you want to work on a crappy blockchain, or do you want to work on Bitcoin and do some real damage, right? And let's build a stable coin. And so we went from there. But what I see a lot in the space is people coming to me and they say, how do I break into DeFi? How do I build my own Arkadiko? Where do I get started? What do you see as being helpful? And I was just wondering, maybe Muneeb, maybe someone else, what do you guys see as critical missing building blocks today that would really enable DeFi on stacks?
I feel like if you would have asked me this question a year ago, I would have given you a list. And if you're asking me this question right now, I think my answer is only time. Like, I think the only thing left now is time. Like, people like you are building amazing stuff, and I think most of the building blocks are actually online. By the way, that line in there you had, that you want to build on a crappy blockchain or do you want to build a Bitcoin? I feel like it's very tweetable.
I'll tweet it right after.
I actually had a quick question for Philip. Actually, I know. So I'm curious to hear more about what you guys are building. So you guys are building essentially a stablecoin backed Bitcoin loans. Is that correct? And I'm also curious to hear like kind of what other financial tools you see you guys building on stacks.
Yeah, it is more or less correct, but specifically we're building a crypto collateralized stablecoin. If you know about Maker, for instance, on Ethereum, it is very similar, where we use stacks as collateral, and against that collateral, you can mint some XUSD, we call it. So we give you some stable coin. So essentially, you borrow against the collateral that you post in our smart contracts. That's one big part of it. One that I am personally the most excited about, since it creates a ton of liquidity. Obviously, it will bootstrap the whole DeFi space, I think, on stacks, whether that's lending and borrowing or trading on an automated market maker, prediction markets, maybe insurance product. It can really enable anything and everything, right? Once you have a stable coin, something of stable value. By the way, we are soft back against the US dollar. I didn't mention that, but probably important to mention. But once you have that, sorry, go ahead.
Oh, I was just going to say, so you guys are backed by, it's backed by stacks, not backed by Bitcoin. Is that correct?
Right, that's correct. And the reason for that is Stacks is the primary, so the Stacks token is the primary asset on the Stacks blockchain. And that is really the first, asset you go to in terms of collateral. Once more, assets come on the Stacks blockchain, we might or might not start accepting those as collateral types as well. One thing I am looking forward is, Bitcoin, I talked about it. It's the best collateral. we are not in a position today to accept it as collateral, but that will happen very soon. I think within the next 6 to 8 months, we will also allow you to lend against your Bitcoin. But that's a bit further away. Yeah, correct.
Yeah. So I think to clarify, there are basically multiple ways of bringing Bitcoin into stacks and then bringing them back. It's a very classic sidechain type of a problem that is well understood. You could do it in a way where there's a federation, like in the liquid chain, that get the Bitcoin back, or you could look into more trustless type of two-way pegs. And they are in various stages of the pipeline in the Stacks ecosystem. The thing that will go live first is called XBDC, that is more like a custodial approach, right? And the way to think about this is that it's a spectrum. If you feel comfortable with the custodial approach, you can go ahead and start using that. Then there might be more federated type approaches like Liquid, or the full decentralized version. I know many Bitcoiners that they would be thrilled about the fully decentralized version. But interestingly, the Clarity language itself has visibility to Bitcoin. So some of the lending applications, you don't even need to move the Bitcoin into stacks. You can just lend it on Bitcoin itself, and Clarity understands that. So you can write logic against it. So there is, I think there's enough there to start seeing the DeFi ecosystem kick off, but obviously in the next 6 months, 9 months, as some of the other things are coming online, as complete trustless two-way pegs, or ability for Clarity to directly write to the Bitcoin state, we will kind of like see the next level.
Got it. That makes a lot of sense. Yeah, I guess always the issue with sidechains of the two-way peg essentially, and I guess the main kind of financial application right now that can be done with stacks is essentially a stablecoin backed Bitcoin. Not stablecoin backed Bitcoin loans. Well, that's one of them actually, stablecoin backed Bitcoin loans. But I guess what Philip is actually working on is stack back stablecoin loans.
Yes, and I think one really interesting thing there is Stacks is a unique asset that earns native Bitcoin. Right? So there's a smart contract where if you park your Stacks, you're actually earning Bitcoin on the Bitcoin chain. And the yield right now is like around 12% or something like that, which is super interesting. But then if you have a smart contract that is issuing USD and you're parking your Stacks in there, those Stacks can also earn Bitcoin, right? Other than the incentives that the stablecoin might have there. So I think the one way to think about Stacks is because of this native integration with Bitcoin and the yield that you can get in pure Bitcoin on the Bitcoin chain, it's kind of like a Bitcoin bond, right? And now you have that Bitcoin bond in a programmable fashion in a full smart contract blockchain. So what can you do with that bond, right? So you're actually putting that bond in the stablecoin contract and then issuing a stablecoin against it.
Yeah, and to go a bit further on that point, the holy grail for us, for Arkadiko, would be under collateralized loans. Everything in DeFi and generally in the world is over collateralized. So I gave you more Bitcoin than the dollars I want to lend against it. But what we're really looking into as a use case is, can we lower that collateral threshold and allow the user to borrow more without increasing their risk? And that's something I'm actively looking into these days. Because for me, that would be the biggest liquidity creator of them all, right? If we can solve that, we're golden, I would say. And one way we could do that, I'm not sure, but Muneeb, maybe you can shed your light on that as well. As you know, Stacks is an interest-bearing asset. You get Bitcoin for it if you put it in a proof of transfer, if you stack it. Do you think that would be a way of lowering the collateral threshold that is required? Because you get an income you earn yield every 2 weeks or so. Do you think that could help with just lowering that risk, or how do you see that?
I think potentially, but honestly, I'll need to think a little bit more about it.
Philip, I have a background in lending, and when it comes to sort of over collateralizing loans, my guess is if you're earning like something like 10% APY in Bitcoin from stacks that you are using as collateral, my sense is it would lower the requirement that you would have to put up, but I don't think it would flip you into sort of being able to get a better loan to collateral rate. But so like I don't think it flipped you into like having an under collateralized loan essentially.
Right.
I don't think it'd meet that.
Yeah, I was just going to ask that as well. Like the idea of an under collateralized loan would assume some type of identity or reputation or something, because otherwise it's free money.
Exactly. Yeah, exactly, and that's like typically what credit credit issuers do is they underwrite people's credit worthiness by looking at their history of paying back, and also like things like their earnings and their sort of like liquid assets. So if you're trying to get like a mortgage, for example, you have to show people that you make money, yada yada. But there are some I saw some folks trying to do this. They're trying to get like a portable kind of like credit score for your propensity to like lend and pay back on time. But it's definitely one's like pseudonymous because they can have a history of paying back only to do like essentially like a big rug pull of a loan as like the last loan and then just ruin their reputation. So that's a little tough.
Yep. Yeah, I don't think you could ever have pseudonymous like under collateralized loans. I was actually curious on the subject of I remember Muneeb, you mentioned kind of the concept of being able to make yield on your Bitcoin using stacks, and obviously on the conversation of capital, like there's no there's no free money, there's always risk involved. I was curious, like what is the risk involved with like individuals who want to make yield on their Bitcoin using stacks, for example?
Yeah, so I think that was kind of like a app design I described that Philip was talking about over there. What I'm saying is that the collateral, let's say it's a stablecoin collateral, it could be USDC or XUSD that Philip is working on, that is placed in a Clarity contract, and Clarity, remember, has full visibility into Bitcoin, and you are doing lending. Let's say there's a hedge fund that doesn't want to hold Bitcoin but wants to lend it for a little amount of time. They would put up, call it like $1 million in collateral as USDC or something. And a Bitcoiner can actually just lend the Bitcoin on the Bitcoin chain. And the time passes in blocks there, right? So that by X block, if the Bitcoin doesn't come back, then the Clarity contract is automatically going to trigger the collateral to go to the owner of the Bitcoin. So the risk that you're taking here, I think, is a great question, because people should really peer through what's the risk in the system. So the risk in the system actually boils down to the Clarity contract. And that's where it was super important for us to have a decidable programming language where people can have mathematical proofs of correctness, meaning that you can have a mathematical proof that says the only thing that can happen if the Bitcoin does not show up in this address by this Bitcoin block is that the collateral is going to get released. Right. So that's where I think the risk profile goes down a lot, because you can have mathematical proofs. And then obviously, I think there could be weird dynamics of just Bitcoin price. And I do think that for this application to take off, you likely want to be like 200% collateralized or something like that, because Bitcoin price fluctuates. Right? You don't want to take a price risk when you're lending your Bitcoin.
Got it. So yeah, that's interesting, because it's basically I guess the risk essentially is because whoever's taking out that loan is essentially shorting Bitcoin, and so the risk is Bitcoin going up significantly and going on a bull run, and so ensuring that the Clarity smart contract essentially liquidates the position or unlocks the position, and the person who is lending is then able to convert that back to the original collateral before Bitcoin goes up too much, I guess is really the big task at hand.
Yeah, so I think in a way, if Bitcoin is now too valuable to return, then you're kind of like the person who is lending it has calculated the maximum there. So let's say it was 300% collateral. So you're saying that there's no way in the next 24 hours or 1 week, Bitcoin is going up 3x, right? But if it does, then you capped out your max there, that you will, the person is not going to now return your Bitcoin, but you will get the USD, and you can, or USD stablecoin, and you can go and buy more Bitcoin.
Got it. That makes sense. Yeah, it's really fascinating to see kind of the two systems kind of developing in parallel. Where you can obviously do like a very similar thing with DLCs as well, where you can say have your Bitcoin as collateral, and you simply have your Bitcoin stored in a DLC, and then upon maturity of the contract, basically the amount that's lent out is represented in a stablecoin amount in the actual Bitcoin that's locked in the contract, and then upon maturity, obviously if it goes above that, then you need to liquidate that contract and give up the collateral immediately, which is just the Oracle revealing a signature. It's interesting to see both systems kind of the differences and advantages of each one.
Yep, I think it would be actually great for people to better understand the differences, and I do think we are trying to collaborate with a bunch of projects in the Bitcoin ecosystem to clearly map out like, hey, here's how RSK is different from stacks, and if you care about these properties, go to RSK. If you want to do this, come to stacks. And I think it'll be good to do such comparisons with the DLCs as well. Frankie, should we? Yeah, exactly. I was going to say the same thing.
Should we let folks up for some questions? Maybe. I think Shannon's the host. Maybe.
Yes. So I just invited Suresh up. He's been waiting for a while. Thanks for your patience, Suresh. Hold on one second. I think he's connecting. Go ahead, Suresh, with your question.
Yeah, sorry about that. I just want to inquire. Muneeb, I know you can't speak more about the various exchanges due to your position, but I just want to inquire, one of the biggest challenges, I think, for any coin or any project to launch is the adoption phase. Now, how big of a challenge is this to get into other exchanges so that mass adoption takes place?
Yeah, so I think interestingly, before the launch of Sachs 2.0 in January, there was a different reason why I couldn't comment on it, because we were very careful about compliance and regulations, and we did the first ever SEC qualified offering, and that comes with certain restrictions because we were building the infrastructure, and we were kind of like explicitly decentralizing the system and launching it. But interestingly, after the launch of Stacks in a decentralized way, like they're independent miners, they're independent entities now, the reason why I can't comment on it is because I don't work on that, right? I and my company, Hiro, we build developer tools. We actually explicitly kind of like, communicated that we don't work on exchange listings. That's not the work we do. And exchanges are kind of like free to list whatever asset that they want to, and many of them have. Like, OKCoin is a US exchange that went ahead without any kind of like agreements or any interaction. They did that. Upbit, which is a really big Korean exchange, but that went ahead and did a listing. So I think in terms of further listings, obviously I understand that in crypto that's very important. But as far as I'm concerned and my company is concerned, like that is not within scope of what we do in this decentralized ecosystem. There are other entities that might be able to comment more, or people can more organically look into these things as well. Like I think it's a trade-off, right? Like if you think about the growth of Bitcoin, the reason why Bitcoin is so decentralized is that there was not a single company that was basically doing everything for Bitcoin. It's an ecosystem. And I think we are trying to, again, have that culture fit with Bitcoin. We don't want to create any centralized points of control where everyone's kind of like looking up to a single company that, hey, you should be doing X for the ecosystem.
Great. The next question is from Salahuddin. Go ahead with your question.
Hey, thanks. Hey, Muneeb, nice to hear from you. Love the thoughts. Interesting discussion earlier about how user experience on Ethereum is better. What are your thoughts on if that's the case? Is that why the adoption on Ethereum is more, and it's been on a more shaky base, right, platform? versus on Bitcoin, much more strong, foundationally. But then how does user experience improve on that front so that it leads to more adoption? Thoughts there?
Yeah, great to see you here. I think it's more than that, right? Like I think Ethereum deserves the credit for taking smart contracts very seriously and being the first project to do that. Right? And I think smart contracts are a very, very powerful force, and maybe even more powerful than people thought that they are. Right? So Bitcoin is really riding the wave of sovereign money. Like I think it's a very, very powerful idea, and it has a long way to go. But I think smart contracts are another thing that emerged in the ecosystem. And I don't think that people in the Bitcoin ecosystem have taken smart contracts very seriously. Like if you think about sovereign money, a lot of the Bitcoin community, like Bitcoin Miami conference is coming up. If you look at the agenda there, most of the stuff is about Bitcoin as sovereign money. Like how does it become a store of value and so on. If you look at Saylor and other kind of leaders in the Bitcoin ecosystem, they only talk about Bitcoin as a store of value. And I think this idea of smart contracts is underappreciated in the Bitcoin ecosystem right now. And I think Ethereum deserves credit to kind of latch on to the power of smart contracts. And if anything, I think the idea itself is so powerful that whatever kind of the potential problems with the underlying technology were, people were willing to put up with that, right? Like if you think that scalability was a problem, imagine how high fees people are paying, but they're still, because they want to use the smart contracts. Same with, the Solidity language and potential security problems. There have been hacks of hundreds of millions of dollars. It has happened. Everyone knows that, yes, these are problems. But the force of, the use cases of smart contracts is so strong that people are still using it, right? So I think, frankly, I think Bitcoin has a little bit catching up to do. Projects like Stacks only were able to bring smart contracts 3 months ago. And I think even generally speaking, I don't think there's a lot of awareness in the Bitcoin ecosystem that how powerful can be these two forces together, the power of sovereign money combined with the power of smart contracts.
Do you mind if I add something to that? I think another force that grows the number of developers in an ecosystem is when you have startups who raise funding and need to hire developers. Because especially as far as the accelerator is concerned, this is one of the ways that we can really help grow this ecosystem, is that we attract promising founders. Those promising founders raise money from investors who see the potential for them to build companies. And then they're building on Stacks, so they need to hire developers. And then there's a financial incentive for developers to overcome some of those barriers to entry that might be present. And the bigger the startups grow as well, then there becomes almost like a secondary market of educators in the market who, a lot of these, the companies that Stacks has worked with over the years, even like Lambda School, where they're teaching Clarity in their boot camps, they have companies that they can place their developers into, and that's how the cycle starts to grow and expand.
Big plus one to that.
Great. We have Joshua Diamond connecting. Joshua, when you're ready, go ahead with your question. Great. Joshua, go ahead with your question. You can unmute yourself.
Oh, hi. Can you guys hear me?
Yes.
Is my mic on?
Yeah, we
good. Anyway, thanks for putting this together. I'm Joshua Diamond here. I had a question for Philip about the Arkadiko protocol. Very excited for it, and I was just wondering just a little more on how it contrasts with Maker on Ethereum, and then here in the Bitcoin community on RSK, you've got a dollar on chain, sovereign. Specifically like the governance structure, how the DAO works. Is there going to be will there be like a maker token, or like you know, an RAF was it RIF token like there is on RSKs? Could you maybe expand on that?
Yeah, great question. So we did look quite extensively at Maker's design, and we looked what they did really well. And I think it's great decentralized stablecoin. So we took a lot of their ideas and incorporated them into Arkadiko. Having said that, there are a few things that I think are better in Arkadiko, starting with stacks. If you use that as collateral, we automatically stack that for you. So just lending against your stacks means that you have to pay a stability fee. That's the same in Maker. So imagine you have to pay 5% interest on what you borrow, right? So if you borrow $100, after a year you have to pay 105 to burn your position. But at the same time, you're stacking your stacks, and so your net win, let's say, is still 5% if your APY is, let's say, 10% for stacking. So I think that's a big advantage, because your loans will, between quotes, be either free or less expensive. I think that's a big win that we have against any other decentralized stablecoin, just because we're leveraging the underlying proof of transfer. Another thing is that I do think we have this extra advantage that we have a lending and borrowing platform incorporated pretty soon, where Maker really focuses more on just stablecoin, right? So I think these two are big advantages that we have. Obviously, you know, not factoring in Ethereum versus Bitcoin, but purely looking at Arkadiko versus Maker, right? So that's one thing. And you're correct in the sense that we will have a governance token. It's called DCO. And governance, obviously, what I always say is you cannot build a DAO by being a DAO. It's very hard to do everything decentralized from the get-go, but we will have governance on chain from the get-go. Our token supply will be, you know, as decentralized as possible. We will do a fair launch, meaning we will distribute 50% of our token supply to our users. You know, early incentives, the more you deposit, the more you use our platform, the more you will, you know, let's say liquidity mine in terms of governance tokens. So this is super important for us. We are DeFi users, we're building this for DeFi users, so we want to do something fair. We're not gonna do, you know, a pre-mine of 70% to the founders and then, you know, keep our, I don't know, do a pre-sale of another. No. I think we need to do things as decentralized as possible. So I don't know how Maker did this with their Maker token, but for us, it's very important that, you know, we don't do a rug pull, or we don't have everything sitting with the founders or with just a small group of investors. This is very important ideologically for me. So yeah, that's another point. I think the more decentralized we can make this, the better governance will work as well. So yeah, I hope that answers your question.
Yeah, and I just one more quick follow up on that. For the testnet phase, are there going to be any incentives for you know, for people who, you know, try it or maybe contribute or do any, you know, bug bounties or anything like that?
Yeah, I've been thinking about that. Nothing's set in stone yet, but probably in 2 weeks we will come out with a blog post describing all the incentives and what we want to test, how long the testnet phase will be. By the way, we are going into testnet on June 16th. Likely it will be 6 to 8 weeks, and there will be some incentives. I'm just, you know, with the team locking down the exact rewards and things we want to do, but definitely more details on that soon.
Excellent. Thanks for answering my questions.
Great, thanks. Bitcoin Gandhi, you're up.
Yeah, hey guys, Peter here, and I'd have like a question for Philippe. So yeah, I'm spending like most of my day kind of putting my Bitcoin onto Ethereum, wrapping it onto Polygon, and then the bridges onto the Binance Smart Chain. So it's really like annoying, and you guys like touched on this as well. And my question would be quite simple in terms of like doing this on Arkadiko or with stacks. What would be the expected timeline? Could this be done like maybe even this year, or is this something more like 2 or 3 years from now? And like in terms of, can the masses use it this year, or that's a couple of years from now?
You mean specifically Bitcoin or Arkadiko on mainnet?
Well, like leveraging my Bitcoin, kind of you making my Bitcoin work without having to put it on other blockchains, whether I guess Arkadiko as well, but in like on stacks as well.
Right. I think the lending borrowing use case that Muneeb talked about just a bit earlier is definitely something we can do if we focus on it this year. It's just a matter of prioritizing. We're technologically ready for it. We just have to put that escrow contract into Clarity and put it on mainnet. So that's a use case that we can activate for you guys. So the lending borrowing part, but putting your Bitcoin to work in terms of collateral is a bit more technically advanced. Also for the reasons that Muneeb touched upon earlier, whether you want to get a synthetic, so wrap Bitcoin, or you want to keep it on the base chain, let's say. I do think there are technical challenges with posting Bitcoin as collateral and keeping it on the base chain at the same time, mostly because our liquidation engine inside of Arkadiko needs access to the collateral, and we cannot launch a Bitcoin transaction from within Clarity today. We can read state, but we cannot write state. And Muneeb, correct me if I'm wrong, but I don't know if that will soon or ever be easy to do.
Yep. So I would say Bitcoin lending is, I would say, order of months, definitely not years. And then Bitcoin collateral, where you can, Clarity needs to directly write to Bitcoin for collateral. That's in the R&D phase right now. The upcoming release, which is SAX 2.1, roughly later this summer, may or may not contain it. But I think it's one of the biggest R&D works in the pipeline. Put it like a 6 to 9 month timeline where we would have a much firmer grasp on when exactly can that go live.
Cool, thank you. Really, really looking forward to it.
Great. Any other speakers from the community?
Excellent. Muneeb, Patrick, what do you think? Should we end it?
I think we can wrap it. It was great.
Yeah, absolutely. Hey guys, if this was great for you, please join us next week at the same time. We have speakers lined up for the future of decentralized autonomous organizations, or DAOs. There's a lot of conversation around them right now, and we're going to kind of explain what they are and bring in some speakers who are dealing with them on a day-to-day basis. So that'll be next Thursday at 5 p.m. Eastern. We appreciate you. Thank you so much.